My episode on wealth management and trading got cut off apparently at the 1 minute mark. Somebody emailed me. I had no idea. So thank you for emailing me about that. Let me just get to the high points of what I was talking about there. So you have to understand a lot about, your personal risk tolerance and what kind of trader you are, how confident you are to produce similar returns that you've done in the past. So if you're someone who is actively, kind of like I was, where you're actively trading at chaotic times and you can do well when maybe the market is moving sideways or going down and you like that volatility and you're in and out during the day a lot, you will benefit over the longer period of time by holding assets. And you have to do that in a proportion to your overall stack of money that you're not going to lose sleep or go crazy if the market goes down 50%, say, that it's painful, but you have to do it with the amount of money that you can tolerate. So let's just make up some numbers. Let's say you have $100,000, and let's say that 20,000 of it is what you're trading with in your trading account. That's how you make your income. And the other 80,000 is discretionary spending money, lifestyle money. And then maybe out of that, let's say there's let's say there's 30 that you want to invest and grow and have kind of a wealth management type perspective with. And with that money, that's the money that I would put in assets. And how you do that is up to you. You could be very conservative, fixed income. You could do stuff like cryptocurrency. You could do stuff like, different kind of tech stocks, different ETFs, whatever you want to do, whatever mix that you feel is necessary. I do a little bit of all of that stuff. And then when the market gets busy, that stuff's going to go down. But if I'm trading well and I'm in there, I'm going to make money. It hasn't worked for me this cycle because I've just had a whole bunch of distractions and vacations, and I'm getting construction done in my house, getting an office built. So it's just been a little different for me this time. But in the past, and I'm going to start trading it more soon, but in the past, I would be, I generally do well in a period like this when it's volatile and going down. And then my assets get hurt. But what happens is I take some of that money that I've made and I start just distributing it towards those buckets that I have predefined. It's like, okay, 10% in crypto, 20% in innovation, tech, growth stocks, 20% in more dividend paying type stuff or fixed income stuff. And those are just that's like my wealth management bucket. And it just keeps building over time. And I don't mess with that a lot. And some people say, that's crazy. How do you not, if you're confident you should be trading all your money, or, you should be, timing that and getting in and out. And that sounds good, but I found that the same person trying to trade in the short term, in some of my trades now are a few months, and some of them are a few days or a few weeks. And then when it's like this, I'm doing less of that and more of stuff during the day, hopefully, because it's busy and the overnight risk is high. So I can kind of mutate between different time frames depending on what makes sense. And I've spent a lot of time trying to learn the skills to do that. And it comes and goes. So there's no one thing. It used to just be day trading for me, as I've talked about in the past. So anyways, back to the overall point though is, so when you're doing that, it's painful at times when it goes down, but I've learned that if I'm going to keep doing this work, my job is to keep stacking money up longer term that's going to grow when the market goes higher, because when we go up, there's never a plan for a trader to necessarily buy in and hold, because you're always in that trading mentality where you're flipping in, you're out, and you're seeing it in a short-term horizon, but you're not anticipating the positive things that come out of left field and the fact that markets generally go up over time. They might not even go up over a 5-year period. Which seems crazy to people, but even a 10-year period, things could go sideways. But if you're trading and you own stuff, you continue to make money that way. But if I have a lot of friends who have been trading for a while, and they'll just trade the cash to make income, and then they're always so conservative, they're never investing, and they miss out on the fact that markets have been going up for the last 10 or 15 years. And you're just sitting in cash constantly. So I think if you're a new and developing trader, and you're always, you're working on building up your money and having enough money to even trade, it's a different situation. But once you start making more money, and as your money grows, you'll have to see it more and more this way, I think. I mean, you don't have to, but I have, at least. That's a better way to phrase it. You don't have to do anything, but I've started to see it more and more this way. And that's not always been easy mentally or emotionally, to watch money that I've earned go down for no reason, but it also goes up for, I guess, no reason. In a way, I'm betting on things just moving up going forward, and right now that's not really the best case. So, but because things are going down, but I mean this is something I've adopted since 2008, pretty much, because I've seen it again and again. I realize, like, well, when there's turbulence, trading is good. So why not own things when it's calm? Because it's harder sometimes to trade when it's very calm and just grinding higher. You might get less volatility and less opportunities, and that's the strategy or the environment where I get into more earnings based strategies and swing and position trading, because there's more kind of slower upside momentum stuff. And right now that's not working at all. So it's more headline risk, get in, get out during the day. Maybe some overnight stuff if you like it. Shifting focus towards things that are in vogue right now. Commodities and materials and things like that are moving around more and a little bit easier to trade than the stuff that was good 6 months ago, 3 months ago. And that's like kind of life in the market. It's always working and moving around that way. But if you look at the bigger picture, it just continues to, things move higher. And I think when people get scared, they always forget that things come out of left field that are positive too. Innovations, technology, humans are always advancing, and that's just the way of things. And so it seems pretty grim right now when you look at it, like how are we going to get out of this? How are things going to get better? But they do. Companies start to generate more earnings slowly. The valuations, the market takes them down low enough where the valuations become reasonable again, and then the earnings come back, and off we go. And it just cycles again and again and again. And I think right now we're in a little bit of a fear bubble with the media. It doesn't mean that it's time to invest right now. I'm getting off on a tangent. That's not what I'm even trying to say. It's just that if you really zoom out and look at it, it's kind of like, as you start to do this longer, you think about yourself as a trader. And I think of myself as kind of the CEO of myself, not an employee of myself, if that makes sense. I used to be like the employee, so I was just the grinder all the time, the trader. But now I'm thinking, okay, now I have to worry about, am I putting some money away in stocks, or is it in the right place? Does it make sense to have some crypto? Does it make sense to do these stocks or those stocks? And then there's the trading job, which is, what am I doing the right instruments in the right time frame for the environment, and am I adapting? And it's almost a different a job that is not easy to do both jobs. So I've kind of passively almost outsourced the longer term money stuff and just thought I'm staying in for the most part. I might make some shifts, but for the most part, it's just kind of dribble money into there and put that away. And that's a bucket. And that percentage stays at something that I can sleep with at night. And I'm always figuring out what that is and how that feels comfortable. It's still pretty conservative versus most people, but I know a lot of traders who, they get out before '08 because they see the crash coming, and then it's 2012 and they still haven't got back in, and they're still trading, and they can be doing well trading, but they're not taking advantage of markets, that the fact that they go up like a regular person invests in a 401k or whatever. There's a million, you can do other things. You don't have to be in the stock market. You can do private investments, or obviously investing in yourself and your business and your trading is more profitable. But this recording, I guess, is more geared towards someone who's been doing it for a long time and is thinking about these things. And that's just the way I do it. And you could do it with a really small amount of money, but it's kind of a hedge in a way. For different things that can happen. So you're building a little bit more than just you trading every day. I just want to add a little bit to this, that last episode, because a lot of people it might not seem right. And if it doesn't seem right, then don't do that. That's just advice. I'm not even giving advice. I'm sharing what I do, what I've learned, because my trading in the past, I've done well, because I'm futures trading, going long and short at times of crisis and things like that. And this time it's not happened, but in the past it has. So it fits my style to do that. If you're a long only swing trader or using an earnings based strategy or momentum strategy, taking advantage of the fact that markets are going up most of the time, this might not be good for you until if you're generating money though in a down market, it could be good for you. So it's more specific to thinking about how you want to run your life given how you make your money. So that's an important thing that I wanted to kind of reemphasize, because it might not be good advice it might be psychologically difficult for you if you're struggling with your trading and your assets are going down because they're in the stock market and you feel like you're getting a double whammy, which is very difficult. So keep that in mind when you're thinking about it.